Welcome to Local Authors, a program where authors share their insights into the creative aspects of writing a book and their experiences with the publishing industry. I'm Sue Camilleri, your host, and my guest today is author of Strategic ETF Investor, Scott Frush. Welcome to the show, Scott.
Thank you for having me.
So it's got to be a real eye-catcher when the subtitle, is that what you call the lower title?
Yes.
The subtitle is How to Make Money.
With exchange-traded funds.
With exchange-traded funds. Everybody wants to make money.
Correct.
So.
Or protect money.
Or protect money.
Right.
So tell me first a little bit about yourself. That will explain why you chose to write a book about exchange-traded funds.
Sure. Well, not only am I an author, but I'm an investment advisor. I'm an independent investment advisor. I have my own office in Northville here in Michigan. I've been doing this since 1993. I actually got my start over at Merrill Lynch in Ann Arbor when I was attending Eastern Michigan for undergrad. So whenever I have time, I try to write. It's pretty busy over at my firm. This is actually my 10th book, my sixth with McGraw-Hill, first that is a hardcover, and so very excited. It just was released this past summer in May.
So I'm curious why you decided to start writing a book. Not only are you working full-time, but you have a family, and somehow or other you've managed to write all these books. What led you to do that?
Well, exchange-traded funds are a relatively recent innovation. The first stock market was established in the 17th century. The first commodity exchange was established in the 18th century. We have the first mutual fund in the United States established in the Roaring '20s, and the first hedge fund established soon thereafter. As popular as exchange-traded funds are today, they're very recent innovations. So there's still a lot of investors that don't really know the basics of exchange-traded funds and how they can apply that to their portfolio. So I wanted to take that challenge or that opportunity and write about exchange-traded funds.
So we've had authors on the show that have written fiction and historical books and biographies. This is a little bit of a horse of a different color. This is an instructional or almost how-to.
Correct.
Book. So you've got to be real focused and clear, real linear thinking. How do you organize your information as you prepare to write a book like this?
Well, I think that the organization of a book is actually very critical, and I take that very seriously. So most of my books have the format whereby I talk about the theory or the nuts and bolts of that topic first off. So I go through things like the advantages of exchange-traded funds, or with one of my earlier books, I talk about asset allocation and the advantages of asset allocation when it comes to investing portfolios. But then I also talk about things like pitfalls and risks of that different topic. But then the second half, I find, should be how do I take that knowledge, that theory that I learned in the first half of the book, and apply it to my unique situation. And so the second half of my books are typically the steps or the phases that an investor will have to take to implement the asset allocation in their portfolios, or employ exchange-traded funds or ETFs in their portfolios as well. So I think you have to have a really good balance between the theory and the application.
So do you start with an outline of some sort that you then build on, or are you kind of shooting from the hip as you go?
No, actually everything is very formal with me. Everything's very structured. And so, I think that the books do differ here and there between the different subjects, but for the most part, I sort of provide that introduction and then move into the benefits and then move into the risks, why people should use asset allocation or why they should employ exchange-traded funds. So it is sort of a very disciplined approach to writing the books. And I think that when you write for a large publisher like a McGraw-Hill or a John Wiley or Bloomberg Press for that matter, you have to have that approach. That's what they appreciate.
So another challenge when you're writing something like this, you do this for a living, you're very familiar with the subject, but the people that you are writing for are outside of the industry. And I have to congratulate you. You did a real nice job
Thank you.
of keeping the lingo out and making everything fairly comprehensible. But my favorite part, because I am so basic to this knowledge, my favorite part, and if I may, I'm going to read this, is you make an analogy. And you say, think of ETFs as a car in which the driver is the ETF provider, the passengers are the shareholders, the engine is the underlying securities, and the roadmap is the tracking index. You know, there's a concept we can all kind of latch onto. And you go on to say, not every car is different. Some are Cadillacs, some are
Minivans.
Minivans,
Yeah,
yep.
yeah.
So there's something out there for everybody.
Yes, and actually I use that type of analogy throughout my books. And I do that because my books are targeted for novice to intermediate knowledgeable investors. Someone that has a sophisticated understanding of exchange-traded funds or asset allocation or commodities or hedge funds, other book subjects that I've written, will probably want to look for a different book. This is more on the getting started type of approach. So to connect with the readers, I try to use as many analogies as possible. And I oftentimes, I wrote 2 books on hedge funds, and I like to use the same analogy whereby I say that you could have a minivan, which would represent a mutual fund, or you can have a Ferrari, which would represent a hedge fund, and it's the driver or the portfolio manager that's managing those portfolios that really dictates how safe that type of investment of that vehicle is, right? I mean, you could put a maniac driver behind the wheel of a minivan and a really safe driver behind the wheel of that Ferrari, and you can actually have a safer hedge fund than you would a mutual fund. So again, I like to sort of connect the analogies to the novice and intermediate readers.
And it's well done, I have to say.
Thank you.
So in terms of preparing, now you're very fortunate in that this is not self-published. Did you start out with a self-published book?
I did. I actually started writing my first book in 2002, 2003. Landing one of the bigger publishers like a McGraw-Hill or John Wiley was always my goal. But it's very difficult to land one of those publishers, especially without a track record. And a lot of times they want to see a finished product to make sure that if they give you the contract and they put their resources into the book, that you're going to complete it. So I self-published my very first book. It was released in 2004 under the title of Optimal Investing. I do have the copy. Do you want me to show it to you?
Sure.
So this is my first book, Optimal Investing. It's a hardcover book. It is focused on asset allocation, but again, on the novice to intermediate investor. I put a lot of time, a lot of money into it, and it didn't really sell as well as I anticipated. And that's because it's a self-published book. It's really difficult to sell these. But again, the goal was not necessarily to make money off this book. It was to get my foot in the door with a big publisher, and it accomplished that. Once I was able to present this to McGraw-Hill, I landed my first book with them, and that was released in 2006. Very much like this in content on asset allocation, and that book is titled Understanding Asset Allocation. It's a soft cover, a little bit fewer pages, but it has a lot of the crossover content that this had. So this did accomplish its goal.
Well, there you go. A man with a plan. I like that. So now you can give us a little direct comparison maybe between self-publishing and having a publisher.
You know, I've had the fortunate experience to work with McGraw-Hill. They're terrific. They have great editors. They have great copy people, great publicists. They really know what they're doing. I've enjoyed that. I've always wanted to go that route because it's, as an investment advisor, as good as you might think you are, you still have to get the message out. And I look at the books, and especially with a big publisher, as credibility and exposure.
Exactly.
So I have a business card or a brochure in every major bookstore, or presumably every major bookstore across the country, which is really nice. And So from that perspective, going with a major publisher is great. They typically pay you a small advance, and then they pay you royalties on top of that. And you typically don't have any significant expenses that you have to pay out of pocket. Mm-hmm. The flip side of the coin is self-publishing. And with self-publishing, and I've self-published 4 books. I also write trivia books, as I shared, mm-hmm. and I do that for fun. I love trivia, I love history, so it's a really good outlet for my writing. And so through that exposure to self-publishing, I've learned that you have a lot more control. So whatever you want to put in the book is going to go in the book. If you want to choose your own title, you can choose your own title. And you do have the responsibility of all the expenses, whether it's a publicist or the printing or the editing. But you retain all of the profits as well. You don't have to pay out, 90% or 80% to a large publisher. Mm-hmm. So it really all depends on what you want to accomplish. I think that new authors should investigate both paths, and they probably should consider going with a major publisher, at least at the beginning, if they can land one. Mm-hmm. And then once they build up a name and a credibility to themselves, then they can explore the self-publishing market to a greater extent.
And expect some success at that point then.
Yes.
Mm-hmm. Pretty good. I thought of something while you were talking, and it's blown right out of my mind, so it'll come back.
Okay.
You know what I found is kind of interesting in your book, and I'm wondering how it complicates things, is there are a lot of graphs, a lot of boxes with lines in them. Does that make it, I'm sure they want all their information in a specific format. Does this complicate the information that you give your publisher for them to print? Are they sending it back saying, no, that doesn't work, it's too this, that, too light, too dark, too whatever?
Surprisingly, no, believe it or not. They are quite flexible in what I present to them. Rarely has anything come back, at least in graphical form, that they want to enhance. They have their people behind the scenes that do enhance some of the figures and graphs that I've sent to them. Believe it or not, a lot of what you see in my books when it comes to the figures, the charts, I actually create all those in Excel, and then I email them all of those files. And they do touch them up here and there, but for the most part, 95% of that, it comes from my efforts.
Oh, I was sure that was going to be just, oh, that was a nightmare.
Now, I don't know what goes on behind the scenes after I send the files.
Oh, that's true.
But what I hear is everything is fine for the most part. Typically, you'll get back the entire manuscript about a month or maybe 2 months after you submit it to them with different edits that they want to make. And then there's probably a good 100 or 150 questions that they have about, is this what you meant by that? Because maybe we need to make it a little bit clearer, things such as that. Or, maybe there's a gap in talking, maybe I go from A, B, and then D and E, and I skip that C or that bridge. And so that's what a large publisher has. That benefit is they can sort of connect those dots for you.
Yeah, yeah. So you do, I'm sure, a good amount of proofing before you even send it on. Do you do it all yourself?
With the books that I've written for McGraw-Hill, yes, because I can rely on the people that they have to do the editing. But believe me, I read every chapter probably 3 or 4 times before I submit it to them. And then once they read it over and they edit, then I'm going to probably go through it another 2 times. So I've really gone through everything thoroughly. Now on the self-published side, I've leaned on family and friends and business associates to take different parts of the context and to edit that for me.
Yeah, you really do need a different set of eyes. You could be looking over the same mistake time after time that somebody else would pick up right away. So I remembered what I wanted to ask. We've had people who have been self-published, and there's a lot of resources out there online where you can kind of do it all yourself, send it in, and they have very strict criteria about the font that you put it in and the size and all of that. Do you run into that same thing when you have a publisher like McGraw-Hill?
Surprisingly, no again. They're actually a lot more flexible, as you might imagine. They do send you out some guidelines before you start writing the book, but for the most part, as long as it's double-spaced and roughly 12 font, and you don't even have to have their font type, whether it's Times New Roman or what have you. But they're really cool about that.
So.
And then when you're done, you just email it to your editor. It's really as simple as that. Now that's the process, of course, but landing a McGraw-Hill, I mean, you got to know what you're talking about, right? That's one of their big criteria. For me, I'm a certified financial planner. I hold one of the top designations in the investment field, the Chartered Financial Analyst designation. For what it's worth, I know Michigan residents are not a big fan of Notre Dame, but I have my master's from Notre Dame. And then I had my self-published book as well. So I brought this credibility to McGraw-Hill, and you have to have that before you approach them.
Yeah, I'm sure. One thing you said when we talked earlier, you find a subject, what was it?
Correct.
Find a market and then write a book to fit it. Now that's an interesting concept.
Yeah. I learned that the hard way, but I think it is a great tip for anybody that is looking to write a book. Unfortunately, people that are looking to write a book have a book in mind. They want to write about something specific. But what I tell people is the best way to be successful with a book is not to write a book and then to identify markets or venues to publicize or to sell your book. The best way to do it is to pick out a market and then to back into what book can sell into that market. So what I mean by that is, and I'll sort of talk about my first trivia book. I wrote a book on Italian trivia. It's called Ultimate Italian Trivia. I published that book in 2006. Now, I'm not Italian. My wife is Italian. Her parents were born in Italy, so there's a lot of the culture in the family. And I sort of wanted to learn more about that, but I didn't know what book to write. But there are so many newspapers and magazines and websites that are dedicated to Italian Americans or just the Italian culture. So once you know that you have a market like that, then you can sort of back into what book you want to sell. And the reason is that, and I don't know if I'm going to get this expression correct, but they say a great book is not written. A great book is marketed. So unless you have a way to publicize and to sell your book, you can write the best book, the greatest book in the world, but if nobody knows about it, it's not going to sell. And a lot of newer authors struggle with that concept.
It makes sense. If you've got a built-in market for something that you're holding in your hand, you're going to sell more. It's kind of two wildly divergent things that you do. You do these investing books with lots of facts and figures, and then you do these, I don't want to say frivolous, but lighter subject trivia books. How did that come about?
Well, I really enjoy history. When I have some downtime, and rarely do I have downtime, you'll find me watching the History Channel or some of those other related channels on TV. Rarely, do I watch any of the real life type shows, real world type shows. And so I really enjoy history. I really enjoy trivia. Of course, I love writing. And so when you put the three together, it just said, hey, a trivia book sounds like a really great idea. So I really enjoy writing my investing books as well. But there comes a point where you just say, okay, investing is great, but I do it full time as well in my business.
Yeah.
And so that's all you do sometimes if you are counseling your clients and then you're writing, at home, right after the kids go to bed, that sort of thing. So the trivia books are really my outlet or my hobby.
And I find it really interesting. You've got one of your trivia books here, The Ultimate Italian Trivia, and you got a grant to do this. What a concept. Tell us about that.
I sort of fell into that, but there are actually a number of grants that are available in the marketplace for writers. I don't know how easy they are to obtain. I can't imagine that they are, but nonetheless, the gentleman that penned the foreword to my book, Frank Stella, he's now deceased, but a wonderful man. He ran FD Stella Products out of Detroit, extremely well connected. He was the chairman of the National Italian American Foundation at least a decade ago. And my in-laws are very well connected in the Italian community, and so they have been friends with Frank Stella for a number of years, or had been before he passed. And so my in-laws provided that introduction, and through that interaction with Mr. Stella, he said, you need to go for this grant. And so I applied, and I got a small grant for the book, which covered most of the printing cost for me, so that was terrific.
Yeah, that's a good tip for a writer if they can find a grant to pick up all those front costs. That would be awesome. Was it difficult? I've heard grants can be cumbersome things to go through.
You know, I think, well, I only applied for one grant, so I don't have that much exposure when it comes to grant writing. But I think that my book really fit into what the National Italian American Foundation was looking for. So looking for a book that would showcase the Italian culture in a very positive setting. And when they saw this, and it's very unique, I mean, there's very few trivia books on the market, especially Italian trivia. I think there's only perhaps one other. So I think as soon as they saw that, they said, okay, this one looks like a really good book.
Totally meets their needs.
Yes.
Yeah. Well, you've been fortunate in a number of ways in your writing career. Another thing I wanted to ask about, in a book like this, you must of necessity have a glossary. So you've got all of these definitions of all these words. Are these your definitions, or could you lift them out of some other publication? Or
You can lift them, but I don't do that. No. I mean, if anything were to be construed as plagiarizing, of course, sabotage your book, perhaps sabotage your career, and that's any author I would recommend. Don't go there. Don't even have that potential. So you have to really look at definitions, and you have to sort of craft your own in a way.
Well, that way too, you get the full extent of what you are trying to convey in the text. If
Correct.
the definition ties in more closely with it. And another thing I thought was really interesting, and I'm sure you do this with your clients as well, after you've read this book, in the back is a questionnaire that helps you determine what sort of vehicle, which, no pun intended, which sort of investment types will work best for your particular situation.
Yes. And a lot of my books with McGraw-Hill actually have the same questionnaire, because I think it is so important. I think that's sort of a foundation activity that all investors should achieve. So essentially the questionnaire, it's a risk profile questionnaire. And your risk profile is your need to take risk, your capacity to take risk, and your tolerance to take risk. And you sort of construct your portfolio around the least common denominator. So again, to use the analogy that an army only moves as fast as its slowest unit, when you build a portfolio, you build it around the sort of the slowest or the lowest denominator for risk. So if you're very wealthy, you have a high capacity for risk. Goes without saying. But if you don't have that tolerance for risk, if you're not a gambler and you want to play things very safe, then you build a portfolio that is more of a safety or lower risk portfolio. You just don't take the chances just because you can. So that's what the questionnaire tries to identify, is your risk profile. So I believe there's 17 questions in there. And then it identifies, it sort of groups you whether you're low risk or high risk or sort of moderate risk. And then from there, it gives you an idea of what sort of asset allocation you should employ in your portfolio, whether it's 20% equities or stocks and 80% fixed income, or flip it around for somebody that's very aggressive and have 80 to 90% stocks and 10 to 20% fixed income.
And the trade-off there, you're getting one or the other, high returns or high risk? I mean,
Yes.
that's the formula, I guess.
The potential, that's
Yeah,
right. You
yeah.
can't have one without the other.
Yeah. And it's interesting, some of the charts that you have in here do show that, that line. As you increase your return, you also increase your risk.
Yes.
Yeah.
And that's the trade-off as the investor. Where are you comfortable? Where do you need to take that risk?
Yeah. So I remember you saying also in our earlier discussion that you do work full-time, you do have a family, and you've done a lot of your copy reading and editing in the car on the way somewhere with your wife driving.
Yes.
How does she like having an author in the family?
You know, I think she would be my biggest critic, you know, if you would, if I were to think about it from that perspective. You know, she's really good to bounce ideas off. You know, I don't know how enthused she is about writing as I am. She's not as passionate, I think. But you know, she's very accomplished in her career, and she's highly educated. So it's great to have somebody like that to say, hey, I'm thinking about this, or I'm thinking about discussing this concept this way. What do you think? But outside of that, you know, she shares it with everybody that I'm an author, and I ask her to because it can help with book sales as well.
Oh, absolutely.
Yeah.
And book sales can often lead to clients too. So
Yes.
if you have a career and any leanings towards writing, be a good thing to do because it'll maybe help your business as well. Books draw clients.
They do, and it draws credibility as well. And one of my big initiatives of this year is to establish some seminars or workshops around exchange-traded funds. So it's in the works. I'm not ready to go just yet, but I think it's the books that will help me to bring in the audience into my seminars.
That's great. Yeah, that's a good idea. Yeah. And seminars, it's always nice to be able to ask questions. It's one thing to sit and read a book.
Correct.
But when there's that one sentence that you just read 3 times and you still don't get it, it's nice to be able to ask somebody a question.
Right. And people learn differently, right? Some people
Right.
learn better when they're reading. Some people learn better when they're hearing it.
Yeah, yeah. And hearing other people's questions, they relax a little bit. Okay, I'm not the only one that doesn't get this.
Right. And there's a lot of those people, especially when it comes to ETFs, because again, they are so new.
Yeah. Well, and the whole concept of investing, we all feel a bit pressured to do it because that's the only way to beat inflation. But the potential to lose it all is out there, so you want some assurance that you're going about it the right way.
It's a big challenge.
It is, it is.
Right. There's so many different investing products out there, and you're always hearing about different strategies to gain wealth without any risk. I mean, you turn on the TV after 10 o'clock at night and you see all these infomercials that are entirely worthless from my perspective, right? But right, I mean, exchange-traded funds, it's a vehicle. It's not necessarily an investment. It's sort of a pool or a basket of other securities, and it's those securities that are inside the ETF that really dictates risk and return potential.
And maybe we should wrap up by going to your introduction here, and where you say, however, if you are the type of investor who recognizes that millions of dollars cannot be made overnight, then continue to read on.
Yes.
So you have to approach this with reasonable expectations, I guess.
Absolutely, absolutely. I mean, we all hear the noise around us day in and day out about how we need to be day trading and how we need to be buying, you know, this annuity or flip that real estate property to make money. Those things can work, but focus on the investment portfolio, the retirement portfolio, the right way first.
Okay. Well, our time is up, Scott. It's been a pleasure having you here. Informative, I hope, for our listeners.
Thank you for having me.
You bet. And thank you for joining Local Authors. We'll see you again next time.